Welcome to an authoritative analysis of global interest rate trajectories. Today, we examine the drivers behind the current rising rate environment and strategic positioning. The financial world is undergoing a seismic shift. From Wall Street to London, investors are recalibrating for a landscape defined by higher-for-longer capital costs. Rapid-fire economic headlines indicate a systemic impact across all asset classes. Understanding central bank policy mechanics is the first step toward effective fiscal preparation. Central banks act as the brakes on the global economic vehicle. By adjusting interest rates, they aim to control liquidity and curb inflationary pressures. Current projections for terminal rates from the Fed and ECB suggest a prolonged cycle, significantly impacting long-term borrowing costs and institutional investment strategies. One primary driver of these rates is structural inflation. Supply chain logistics and energy infrastructure costs remain high, creating a sticky data environment. Corporate boardrooms are now forced to make difficult pricing decisions as wage price spirals and energy shocks compel policymakers to maintain an elevated rate stance. Sector-specific heat maps highlight that housing, wages, and services continue to defy cooling trends, making the real return on savings a critical metric. Paradoxically, economic growth remains resilient. Technological innovation and robust consumer spending in luxury and travel sectors are keeping labor markets exceptionally tight. We see an inverse relationship between rising bond yields and tech valuations. As quantitative tightening continues, the cost of capital for growth becomes paramount. Global fiscal deficits and geopolitical risks further complicate the outlook. International trade routes are under pressure, and diplomatic summits are focusing on economic stability. Government debt servicing costs are rising as a percentage of tax revenue. This creates a challenging environment for treasury bonds and global currency stability. To mitigate risk, sophisticated investors are turning to strategic positioning. Fixed income laddering and corporate debt assessments are now essential components of portfolio management. Monitor your refinancing windows and maintain a diversified strategy. Our strategic checklist provides the framework for navigating this high-rate environment with confidence. Thank you for joining this deep dive into the global economy. Stay informed, stay strategic, and we will see you in the next Outlook.